sessions, which will be moderated by my colleague Ram. So if you'd like to join me on stage again, Ram, and then we'll invite your panelists to join you. And every time a panelist appears, I want a rousing cheer because they've made it here. No, it's all right, you don't have to. So, as Ram sorts himself out, let's have our panelists as well, please. Could I have Arunachalam? Up there. Vice President and Head of Product Management for TCS Financial Systems. Geert, please. Sopra Banking Software. Mark Jenkinson, Chief Strategy Officer. And Supratim Ghose, Global Head of Core Banking Transformation for Citibank.
Good morning, everyone, once again. Good to be on a panel that actually is very much the topic of the day and the topic of the summit. So we have some very interesting panelists here. And before I get into the questions, I think it will be useful, to also make a reference here that when we talk about next-gen core banking, it means many things for many people, I guess. So the definition by itself is actually something that if we were to discover at the end of this panel, I think that would be an interesting takeaway. So what is interesting also is that we have in the room here on the panel, we have technologists, we have people who are engaging with clients all the time from a sales function. Here, we actually have someone who's heading a product function, and we have Jenks, who's actually been father of Ubota and actually has been involved in driving core banking for many years in many capacities, and now with the Chief Operating Officer at Chetwood. And of course, we actually have someone who is driving transformation at a global bank as a global head of core banking transformation, Supratim. So we really have a variety of perspectives to jump into. So without much ado, let me jump straight into some questions. And maybe I'll start with you, Supratim, and it's interesting that you actually have a view, and by the way, I also read your article while you were at McKinsey, which actually was talking about core banking and it's a consulting perspective as well. But if I was to start maybe, and there was a reference that my colleague Chetan made earlier today, that one of the most common challenges that banks face when they go through this transformation or selecting a platform, or you talk to any CIO or CTO, the concern that's always raised is that the quote-unquote next-gen core banking platforms have a challenge when it comes to ability to scale. Is that something that you agree with, and you have a point of view on that?
Yeah, I think, so first of all, thanks for, it's part of the panel, and it's really one of the topics in the industry which is going through a lot of shift and a lot of change. But the way I think, before even we go to, saying whether next-gen core banking platforms are actually operating at scale or not, it's important to understand what we mean by scale really, right? And in my humble opinion, I think there are sort of three dimensions to scale. It's not just about the system performance only. I almost think of it as the ability to scale functionally, so that is one part of it. Then you obviously have the technical part of it, and then what is the cost to operate at scale. So if you need to take those three dimensions and kind of start to apply, if you look at functional part, and that's where it depends on the customer or the bank who is trying to buy the product to define what the functional scope is, and that's what I think goes nicely back to the point you're saying, that what is next generation core banking. In my opinion, I think you need to think about the core banking. There's nothing called as a core banking system anymore, because if I remember back when I was a child, I used to go to the bank and the transaction was at a teller, right? And there's only so much transactions that happened in a given point of time. And the core banking was nothing but the ledger was the primary thing, and payments or lending, etc., was ancillary to it. But if you think about it now, the ledger is still there. There's a non-functional part to it, but payments is an industry in its own. So the core banking per se is no longer, that's not the way I would look at it. I would think about it as, the core DDA part of it. If you go back to real basics of it, the DDA part of it, and then you think that functionally what are you expecting from the DDA, and as I call it core accounts, we call that core accounts within Citi. That is where you should say that as a product, what are you expecting the DDA to do, right? What is the value chain? And then you can start defining what scale do you want to achieve from a functional perspective, right? That's very important to get, when you are buying a core banking product, or let's say any next-gen core banking, you need to really understand what the functional capabilities of the product you're actually buying for. Otherwise, you're going to end up nowhere, right? So that's the functional scalability part of it. And I'll come back to where at least what I've seen over the last few years. Then when you look at the technical part of it, as we all know, if I take that logic and say that the DDA part of it is the main thing, then all you want the platform to do is to process the transactions that are coming in at high speed, right? And then does it scale, meaning that does it scale not just from the transactions part of it, but let's say for a global bank, you want to now operate in different countries. So can that scale, across your different countries, the deployment models that you may have, that is there. And then finally it comes to what is the cost you are going to pay for that. And that's a nice balance between how much you're going to pay for it. And all these three, I think, together makes the scale. Now, if you look at next-gen vendors, I think if I just look at the DDA part of it, if you just focus on the DDA part of it, I think they're there. There is no difference I see from a retail or a corporate. Obviously, there are nuances there. On the scalability part of it, I think you need to really go and look at what is the main driver of your volumes. Is it a payment transaction? Is it something else? And then you can evaluate them. There are pros and cons there. And then the cost is obviously a function of not just the vendor, but you as a bank or you as a purchaser of the product, how you want to sort of optimize your processes. Are you going to actually have a common business process or not? That's what I would say.
And very interesting, right? And you did bring out the element of scale from functionality as well as from getting the country deployments and the commercial angle. Do you see this significantly different from what it was before, or you just see this actually the same now?
I think it's different in a couple of ways, right? One is because if you look at it, you are no longer sort of, the ledger part of it is no longer changing functionally. It still records the credit and the debit, right? That's what it does. But you have so many other different things that are happening on the ancillary part. That's where the biggest change is.
Interesting.
So for example, the work that I'm doing is on the corporate side, but the corporate is actually driven by what's happening in the consumer side. Right. So there's an e-commerce scenario. There is like so many the blockchain is in the market. So people are talking about how do we handle wallets and stuff, CBDC. So I think all of that is actually having some sort of bearing on what the product needs to do. But I would say the ledger is still the same.
Ledger is still the same, but there are significant changes happening around from an architecture and design standpoint. And that brings me to a question to you here, if I can actually, if you can share with us your views on how you see the architecture and design principles having changed, from what it was, let's say a decade back to how you see it now and how you see it going forward.
I think it goes into what Supratim was saying about how the bank and how the operating model has changed and how you engage with your clients, right? So even as recent as 10 years ago, you would have one bank account and you'd have the majority of your financial services with your prime bank. And if you look at it today, the proliferation and the paradigm shift in the industry, you've got a specific financial service for a mortgage, current account, your international current account, you'll have your car loan somewhere else, you have your credit card somewhere else, you'll have, if things aren't going so well, a payday loan somewhere else. So you've got, even if you look at your own phone, you've got 5, 10 different apps for your financial life. And I don't think it's just a microservices architecture, it becomes a micro-solutions architecture. So you need to look at the business architecture. What solutions do you want to take to market? Where are you better from a customer experience viewpoint that dictates how you operate a business process internally? How do you want to compete? Because if you're going to compete at a business process level or a scrutiny level at a mortgage or the same as an unsecured loan, you'll never write an unsecured loan because people won't want to go through that process that they have to go through for a mortgage. Right? So then you look at what micro solutions do I take to market and what solutions do I put in place as a result to enable that. So if I'm Citi, for instance, and I want to provide someone with a credit card, or I want to provide someone with a mortgage, and I want to provide someone with a high yield savings account. The onboarding and the user journey of those different financial transactions are very different. So I need to have a different business architecture for that, different user experience. And I'll probably look at different providers, right? So a provider that is really good at understanding the business rules engine behind what goes into a mortgage process, or a difficult commercial loan with different tranches, is a very different level of business understanding, business knowledge, as someone who says, I want to win at the CX level, I want to compete with the Apples, the Googles, the Amazons of this world, and I want to get someone like JP Morgan's doing with Chase in the UK right now, getting 1.5% on your savings account. I want to compete at that level, and I can onboard client in 30 seconds. So that's where the competition sits. So as a result, the architecture becomes different from a business architecture perspective, which has an impact on your technology architecture. And the days when someone used to say, I remember one of my old clients once told me, a loan is a loan is a loan. If you go in with that mindset and you choose a solution for that, it would be a master of nothing, right? You won't be good at any point, and you won't win business in any segment of your financial proposition. So from my perspective, the technology architecture and the core banking architecture changes because your business architecture, your business services change.
Fascinating, very interesting. And you say microservices is the name of the game.
I see micro solutions as the name of the game at the bank level. Within those solutions, you probably have some microservices. The only word of warning I have there is you have to play to your strength as an organization. So I have the benefit of sitting on both sides of the fence, from a provider and from a user and builder perspective. If you're a smaller organization, established financial services organization, you need to play to the strength that you have as an organization. Because not everybody has the technology abilities to orchestrate 20 different microservices and stitch those together and perpetually build integrations that enable you to do that. You need a core and a strong technology team that helps you do that and helps you take that to market. I call it the fireflies architecture, right? So you've got all these microservices that do something, and they're all great, and they're all fantastic, best of breed at what they do. But if you put them on a canvas, they move around like fireflies, and it's your job, depending where they move, to keep connecting them. The only problem is, you've got no idea where they're going next. They're VC backed, they want to make profit, they want to go to market, they're pushing out, and it's very difficult to manage that, right? So you need a strong technology team and a strong vendor management team in order to capture that.
I'm sure the audience loves this fireflies phenomenon. Well, actually, I want to take this to Arun, right? I mean, we're talking about micro solutions and microservices, and I know you've actually been in the product management space. 2003, you've actually been seeing this product evolve, and you've been heading the product management function at Citibank. There was a time when we actually used to be, having a definition for universal banking. And we actually see a lot of, buzzwords today about, microservices, microsolutions, modularity. And then there is also this, the gravitation towards hollow the core, as there is a lot of deliberation in various forums, right? How do you see this, sir? And what's your take on, firstly, what these mean or how they get defined from your perspective? And how do you see this evolving?
See, I think, like Geert said, microservices is not easy. It is complex, right? Conceptually, it's very easy, right, for us to understand it. The whole composability part of it, the orchestration part of it is complex, the realization of it is complex. I think I will agree with that and then start my answer, right? But nevertheless, it's here, right? I don't think it's going to go away, and those problems have to be solved, right? See, the way we look at microservices is, if you look at it from a modularity perspective, it's just a continuum of where components were some time ago, right? So there is a continuum of what you call as the modularity journey in a sense. But now if you look at microservices, you have a much more, I would say, fine-grained view of modularity because you have an independent database, right? You are independently deployable, right? And it's self-sufficient functionally, right? So pretty much have what you call as a much more fine-grained control of the functionality that sits within a microservice as compared to what was there in the component world. So it is a logical evolution. It's not a drastic change in our thinking. It's a logical evolution from an architecture paradigm. For at least that's the way we kind of look at it, right? But nevertheless, what that means is the fact that you have independent set of microservices, it leads to the the challenge that Geert mentioned about, right? You have a set of independent microservices. The first important, takeaway is the fact that it enables pluggability, right? It enables what you call as best of breed fireflies, yes, but it enables it, right, in a way. And what that means is when it enables pluggability, it also means it helps in coexistence with legacy, right? I think that is the main takeaway from, that is one perspective that we keep, right? Yes, you have multiple microservices. Yes, they're pluggable in and out, but they also can coexist with legacy, right? I think that is an important point of view for us. And then on top of it, of course, you build your whole baseline of a composable architecture. It comes with its own complication in terms of, the orchestration, etc. And the fact that it's just not APIs, it also includes integration that has to be orchestrated, etc. Right? So microservices, to the extent that they enable follow the code, have to also, we have to keep in mind that pluggability, we have to keep in mind, the composability it enables, we have to keep in mind the coexistence it actually enables. I think that is the first important takeaway, right? I would actually say. And when you kind of look at it from the perspective of universal banking, right? Universal banking can be a euphemism for monolith, or you could look at it as a component-based architecture in a way, right? And where microservices actually deliver the value, right, is, given the fact that, we never associate terms like what you call as fail fast, right, with the core engine, right? And it's always associated with the digital world. The concept of fail fast, innovation, everything is associated with the digital world. It's not associated with the core banking world, right, in a sense. So agility, right? How do you actually enable agility with microservices? That's the thinking that probably, is the journey that you are on from when you look at a universal banking solution to, the microservices world, right? And in the microservices world, can you enable fail fast? Yes, right? And that is possible, right? That is possible. But is it worth doing that? You end up with a catalog of microservices. That's something which we have to keep debating, right? So if you take that logic of pluggability, composability, agility, etc., and extend it to the concept that you have an ecosystem that you have to play with, right? Today, ecosystem integration was not very agile in the universal banking world, right? It has its own life cycle. In the microservices world, that's probably something that you consider as a big positive, right? In terms of with the RESTful APIs, cloud deployments, and ecosystem, right? So as long as you have the base premise that you are actually on a journey of follow the code, you will enable pluggability, coexistence, agility, ecosystem integration. I think that has to be the basic tenet that has to be kept in mind as you look at follow the code, right? And today, if you look at it from the industries outside banking have enabled it, right? If you look at Netflix or if you look at Amazon, I think the whole microservices architecture works, right, at scale, right, in a sense. And obviously, it's hugely technology intensive. It's not easy to get that talent, but it works. And so the architecture works, right, at scale, if you see in Netflix, right, in a way. So, in that context, I would say the concepts or the technical constructs of be it, your event-driven architecture and the chassis, the data strategy, they're all there. The foundation principles are available, and there are banks which are actually rolling it out in a sense, right? So in that context, when you see it today, how do you apply Hollow the Core? At least from our perspective, in the last 18, 20 months, we have seen banks approach it very differently, right? And there are 3-4 ways in which they approach it, right? The first one is they say, can you actually just hollow the product process, right? Can you take out the product process, the ledger remains, etc., right? That is one approach banks are taking. The second approach banks are taking is, can I actually take the ledger out, right? you know, the first one was about agility, the product agility and all. The second one is about you exploiting the cloud, right, in terms of TCO benefits. So can you take the ledger out, leave the processors in there, etc. The third one is a very risk-free way of looking at it, where clients are telling that, can I just take my reference data out, my CIF out, right, first as a microservice, leave everything else in there, right? And this is what we have seen as you know, hollow the core. And we are initially, and our current engagements are primarily, you know, around the first one, which I said is around the product process side and the CIF side. So even though there is a lot of asks on the what I would call as the ledger side, right, from a scalability.
That makes a lot of sense,
yeah.
right? And
I guess modularity is the...
And just to summarize it, you know, one, if I were to take 100 engagements, right, or 100 inquiries or discussions, probably 25 of them fall into the first three, right? There is still 75 who are not willing to do these three things that I spoke about. Yeah, they are more interested in, can you just do the APIification of it? I exploit the cloud, and I basically, you know, plug in, you know, I plug in a CRM capability or I plug in a credit card capability, but the core remains as it is, right? So I think while hollow the core is good, I think it has got still some time to go.
Before it goes. But I think you made a very interesting point, Arun, and I'm going to take that to James here. You know, he talked about, you know, a situation where you see next-gen core banking actually focusing more on product processing. And let's say the whole API ecosystem enablement and customer experience and customer information and sometimes Geert, a lot of pieces that were otherwise considered to be inside the core actually getting out, right? Is that what you see, and you actually have seen this in various capacities, from Temenos to Robota to what you're doing now? How do you see next-gen core banking evolve from that standpoint?
Should I take a step back? Because if I do a little bit of, so you mentioned Temenos. I was a consultant at Capco for 12 years, so I spent a lot of time in this industry. 2016, I threw it all in, decided to build a bank and a technology company at the same time. They were Chetwood and Moderator. And the key tenet of our bank was going to be that we were going to be an open market bank. We're not a tight bank. We don't own any customers. We don't have current accounts. So we trade in the market real time on distributor sites. So we put our APIs into whatever channel has the customer. Now, if you set up a bank that gets its customers and sells its products in that way, you have to think very differently about how you build the technology behind that. Before I came on stage, I just checked some data. We made one release to the core this morning. We put a new scorecard in at 9 o'clock this morning. I've done 100,000 loan applications and 250,000 credit card applications before I came on stage. And that's the scale and speed that a little bank in Wrexham is running at in today's market. And it feels sometimes, when you think about it from a core and an existing position, that when you start with a blank sheet of paper, you end up in a very different place. Our core, if we've got a core, it is a product engine. It is the maths. It's how do you do the calculations. We started off with unsecured lending, so we focused heavily on lending. We've built some pretty clever quants around that. We kept the customer away from it. Customer is something that you're bringing into the organisation, that you're doing decisions on, their credit, their fraud and everything else. But product itself, we wanted to basically put the maths into a box. And we want to be able to change those rapidly. So we've got savings accounts, we've got credit cards, we've got unsecured lending there, but we focused on that. We wanted to innovate in the core as well. So we talk about we can't innovate in the core. Well, the first thing we wanted to do was make it dynamic. We wanted loans to change. We wanted products to change with the life of a customer. And we started really simple. We started with let's create a dynamic loan based on credit score improvement. Seems like a good product. People start with a high rate, and if they improve their credit, they bring it in. It plays to the nudge society, it plays to a dynamic world. It plays to adjacent spaces like motor insurance. When when we track how good you are as a driver, your insurance company. So you can see that even at the core, there is innovation that can be had. So we thought about it in that way in terms of what we put in the core. And I think it creates a very different output then. I look at what we are, I'm now going back to my old work, I'm now selling an API service which says, I can do your lending, here's the API. If you want to use that, then I know exactly the cost. Who knows what exactly it costs to process one loan? I know, because I know exactly what it costs to run a Lambda function on AWS, and what it costs to fire a data source. And I can put them in a spreadsheet, I can build a one-unit economics, and then I know how to scale my organization. In scaling, I don't have to do it. It's totally horizontally scalable. It's just the cost of it's on the AWS. And that's a very different world to what I've previously been in. And I've worked in all the banks. I spent how many years implementing Globus around the world back in the 90s, which was fun. So to see where it's come to in 2022 and where it's going, and you're right, I think when you talked about this has been driven by Netflix and Amazon. And what Amazon did, and the way Amazon Web Services appeared was because they started delivering their technology out to other retailers, and they were shit at it. They went, this is taking too long to deliver. We have to do something about this, and they basically made all their componentry around infrastructure modular in that way. And it was almost an accident that came about because of poor delivery. And there's something that's happening in banking now in this way. I think we talked about it down there, the customer of banking is moving away from the branch and even the digital channel of the bank. It's actually sat in a retailer. It's sat in Netflix, it's sat buying insurance, it's sat buying a car. They're moving the front door of where the actual bank is. So the bank is having to go chase its customers somewhere else. And if you're thinking about selling core banking, who are you selling it to? Who are you selling it from back here? You're so far off the customer that you're not in the game. And so you sell propositions to people, you sell how they can monetize their customers. How do you walk into Astra and say, I can monetize your customer base in 4 weeks? And that's a stronger argument than Asda doing that, I'm going to do a core banking section because I'm building Asda Finance. I think that's the world we're starting to move towards.
Interesting.
I can add just one point on what Arun said. I think on the hollow out of the code, I've been part of a few of them. I think the one thing I would say is don't start a hollow out of the code if your CEO is not behind you. Because that's the big learning I have taken, and if he or she doesn't give you a runway of 36 months or more, it's not like an easy thing to hollow out code, because if you look at any legacy platform, the likes of like mainframe systems or even let's say COBOL-based systems, right? There's so much of coupling. The untangling of a payment from a ledger is way too complex than some people think. So make sure your CEO is behind you, and you have got it in writing that my job is secure.
I don't get why people do that transformation. The average life of any product in a bank, the longest average life of a product in a bank is about 7.5 years, and that's a 25-year mortgage. Unsecured lending, we do 5-year unsecured lending, 2.5 years. You can run the whole book off in 2.5 years. Why would you start a 36-month program? Actually, other than to pay my old job as consultants because I loved it.
I think the thing is that unfortunately, up until very recently, the only time core banking is in the CEO's agenda is when it is not available or it has a problem. When it is down, that's when the CEO knows that there's a core banking system, because everybody is worried about, as you said, the propositions and the APIs. That's the reality, or that was the reality. I've been in situations where, as a consultant, we were struggling that what is the business case for it? And then there was a sell one, and the way the core banking application was being brought up was somebody says let's just restart it. So that's the reality of a lot of well-known banks in the market, right? Now the interesting thing is, and the way to think about it, I think, is it's not just that what you get by doing a core banking replacement, but what is the cost of not doing it, right? So if you flip it around and say what is the cost of not doing it, you are actually exposing to maybe a regulatory issue, said, not being able to sell your products the right way, you can have all the shiny thing. But if your code is not able to handle, let's say, an e-commerce client volume or let's say at speed, then you have a problem. So
actually, we've just given the fodder for another panel we have later this afternoon on ROI measurement on core banking. No, actually, that's very interesting, and I just want, since we talked about selecting core banking systems and going through it, as a banker, what would you think would be today, if someone was to choose a NextGen core banking platform, what should be the considerations in this?
I think if you think about selecting a core banking vendor, I think the first thing I just said, like, what is the product space you want to deal with? That to me is paramount, right? You do not want to select a core banking product. You're either selecting a payments product, or you're selecting a DDA product, or you're selecting a lending product. I think these domains have become just so big that I think one system, not one vendor, I think vendors can provide multiple solutions. There's not one single system who can do the job as best as you need. So I think it's very important to define that upfront, that what's your sort of functional scope and the product scope. That's point number one. I think the second thing I would say is it's very important to understand the people aspect of it, because core banking is not something that you're going to change every 3 years. It's like a 20-year commitment, or 15-year commitment, because it's the core of your system and it's not so easy to replace. So I think it's very important to understand who are the people with whom you are getting into this, marriage sort of, right? So it's important to meet the people, the leadership, because a lot of these next-gen players who are actually entering the market are very new, right? So it's important to understand what is the value prop they're bringing in, and obviously with the incumbents, that what is sort of the focus on that product itself, right? Because there are players who are doing multiple things, and you need to figure out that what is the value you are going to get as a customer. So that's the second point. The third thing I would say is, if God forbids things go wrong, what is your exit strategy, right? Because I've seen so many cases that, for whatever reason, right or wrong, right, this is a complex project, businesses' agendas change, priorities change, and maybe, you don't want to do this thing anymore because of whatever things you face. So what is the exit strategy for it? And then I would say, obviously, try to get a feel for the platform pretty soon. Don't go with too much time with RFPs and sales presentations and stuff. So very quickly narrow down to 2 or 3 players who you think are fit for purpose, and just do a platform trial, or let's say a POC or whatever you think is the right fit. Just go and have a feel for the platform, try and execute those use cases, and then see how the platform behaves. Because as I said, I think every business is different. The needs are going to be different. So those are the 4 or 5 things I would say.
That's very useful, Supratim. And in fact, there was a discussion we had here about how systems are they becoming more persona-driven, and if analytics is being part of it. You want to say a few words on that?
I don't just think that systems or core systems become persona-driven. I think your use case and your value proposition to the market has to become persona-driven, right? And if you look at traditional banks, with all due respect, I've worked for one, they're terrible at doing this. Because if you move up in even your banking relationship, and you go from a standard account, you're a poor man like a student like myself when I started, and you try to grow a little bit. The only thing that changes is the color of your card. Right? The level of service doesn't change, how to engage with you, how to talk to you, doesn't change in any way, shape or form. Right? So you need to build propositions that appeal to different people. So I'm sure Jenks, when he does an unsecured loan, the process to run through that is completely different as opposed to when you've got commercial lending, difficult tranches, or in the ICG at Citibank. You've got, it's the same value proposition from a financial services perspective, but the way you talk to clients is completely different. So there's definitely an opportunity to have analytics and AI and different behavior of how you engage with clients. I think there is a different level of returns if you invest analytics, AI in the core versus your system of engagement or your system of innovation, right? So if you can profile your clients differently when you engage with them through your digital channels or whatever engagement mechanism you use, you'll have a different ROI to that. And I agree 100% with James, right? So right now, we have banks that hold your mortgage, they have your savings account, and then they have your current account, right? They have the opportunity to say, wait a minute, your mortgage is coming to an end. If we remortgage you because your loan to value has changed or the interest rate is dropped, It's a different world, but imagine your interest rate drops. You as a bank could say, well, wait a minute, the fixed term has got 6, 9, 10 months left. But if I reach out to the client right now, I could say, if you go onto the new rate right now, that one savings spot that you have with us as well, that you're putting £100 in per month at the moment, you could increase that to £180, and you'll achieve your savings goal more quickly. Right? Suddenly you've applied analytics and artificial intelligence to give people what they want, right? Because that savings spot is for a holiday, for the car, for the education fund, whatever. The client will feel that, wait a minute, my bank is on my side, and there's value in having all these services put together, as opposed to a scattered way of doing it. So I think that persona-driven is important. Depends where you invest on it, but yeah.
It's not one size fits all.
But you have to change your mindset to what Supratim said, right?
Well, we have the last 5 minutes, and if I may indulge a little bit on a rapid fire round, and I guess there's a lot of audience waiting to hear what you have to say. If I ask you, and we'll start with you, Arun, 2 things, just 2 things that you believe are going to be super critical as we go into next-gen core banking platforms.
First thing is, today there is no standardization of what anybody defines as a microservice. My definition of microservice is different from yours, right? And there is no industry standardization of it. I think that standardization, or at least a common factor, has to arrive, right? Today I can say I have 100 microservices, he can say he has 200 microservices, right? And it can mean for the same scope of things, right? I think that is the first thing that has to be sorted out by the industry.
Standardization.
Second one is integration in microservices is very complex. So the composability layer, right? The strategy for composing microservices is extremely important, right? Otherwise, you really will not be able to get
Standardization and composability are your picks. Yeah, yours.
I would say customer experience, number 1. And number 2, and I hope I don't steal Supratim's thunder, but it's finding fit-for-purpose use cases. Right? So it's difficult to manage the fireflies. What's the opposite? Manage the 400-pound gorilla, right? That's also not so easy. But at least with the 400-pound gorilla, you can buy individual components with that. But find the individual solutions that are fit for purpose for a specific product, and you can delight clients.
Interesting. Fit for purpose and customer experience.
Yes.
James?
I think that we don't use the word digital and we don't use the word core.
Wow, that's a good one. Okay.
Digital banking is something we invented in the 90s, and the idea that as a core in a services-driven world doesn't make sense. There is a service that comes out of what used to be traditionally a core, but it's shrunk really quite small now. And so there isn't a boundary around what is the core. I can draw a boundary around a platform which offers a series of services which deliver use cases to my client. I can talk in that language. I can't really talk in so where's the core part? It's an alien thing to me who was in core banking.
Interesting.
I sell core banking. I don't know what core banking is.
Yes.
Where does it begin? Where does it end? I've got no idea. But that's exactly right.
Thank you. I promise the audience that they will have clarity at the end of the session. Now you just confess that you don't know yourself. Supratim.
I'd say, I think, for getting a next generation, core banking project to be successful, if I spin it that way, I think it's not a technology project. So it needs to be a CU agenda. If it is not, don't bother doing it. That's, say, number 1. If there's one takeaway, that's point number 1. Point number 2, there is, in my opinion, there's nothing called as a core banking system anymore. It's all product driven, so we need to think about it as a perspective of the product.
Brilliant. Thank you, and that brings us to the end of this discussion, and I do want Robin to... Yeah, sorry. Any questions for audience? Yeah, please.
Thank you very much. I'm Alexander, I'm CEO of FinTech. I have a question for Mark and for Geert concerning what you said. First, you talk about core banking, but we don't talk about FinTech, which is strange. And my wonder is, are core banking becoming really marketplaces? We have seen the attempt of Avalok, the attempt of Temenos, the attempt of Finastra. Which one is successful? Why would they be successful? And another question for yourself concerning the A/B testing of fintech solution at the end, who is liable? Because we all know here the contracts that we have to sign, 80 pages contracts of SLAs and escrow agreements. It's great that you have amazing KPIs, but what is the liability of your core system? What is the interaction you will have with third-party solutions? And how do you orchestrate this? Because this will, in a way, destroy some part of the value of the core if you get some third-party solutions. How do you orchestrate this beautiful mashup? And yeah, that's the two questions I have. Thank you.
Which one are we going for first? Fintech, I guess, is probably the right one. It's the sort of only world I've lived in for 5 years. I see everything as a service within there. We've built a lot of them ourselves. It was considerably easier building a bank and a technology company alongside each other because you could try stuff out. And it took away all the challenges of some of the things that you talked about there from a legal contract point of view. I run A/B testing all the time. I run 2 loan brands that compete against each other just for fun, because I can. And I can play with different pricing models and different features on loans. And I run 2 different brands against each other on the same page to see how they operate. So it's starting right at that level from an A/B testing before you tune every parameter of your system, which are constantly being tuned. Core banking vendors becoming marketplaces. I think all of us are operating now in a collaborative services space. The services I pull into Chetwood, we're full bank license in the UK. We have to follow all the old rules, which is crazy. One of the biggest roles I have is this vendor supplier list, because they have to create vendor suppliers. It's absolutely nuts. I'm probably bringing in a new supplier every day, if not 2 a day. And the vendor supplier list is just something that the regulator expects you to have control over in a way that it's just so outdated. But it's huge because it's just a collaboration of all these different services that are in there. The breaking it down from the liability point of view is just getting it smaller into a service which is doing what it says, and it's available all the time. And once you get into that space, you can write contracts against that. In fact, ultimately, you won't write contracts against that sort of stuff.
Thank you. Yes? Hi, Michael.
Just to add, that management of those SLAs, that's what I mean by the fireflies.
Oh, that's right.
Because you can't use 100% of every SLA all the time. So you get 0.9 times 0.9 times 0.9, and before you know it, you've diminished the whole value proposition. What the one fintech will bring to you is something no longer evaluated in the proposition.
Hi, I'm Warren, so I'm a consultant. Basically, the question I'd like to ask is, banking is about risk as well, I'll say. So kind of, maybe it's a generic question. Do we understand the risks when I hear things like, for example, universal, instant, these kind of things, do you understand the risks? Do you understand the sidecards? These kind of things. Where do we see these things? Thank you. Thank you. It's a question for everyone.
Yeah. So I think risk is a very loaded term, right? I think we need to probably break it down a little bit, right? From a core banking perspective, I think there are 2 things which are important in my opinion. One is, if I'm a bank, the only thing I want to or the 2 things I want to make sure it's always there is the right balance, right? When I'm actually providing this thing to a customer, I need to show that whatever the customer, the credit and the debit is happening is done properly and it's done, the data is consistent, right? So that is risk number 1, I would say, and we have to probably do that. The second thing is, we need to be able to prevent any kind of malicious activity that happens as a bank, right? So if you now then start to use these 2 principles, how do you actually achieve those things? And then obviously there is a regulatory oversight which you need to actually apply. So if you think about the core banking system, again I go back to this point that what is the functional scope of core banking system? Because if you look at historically, it had a CIF information. So all your PII data was within your core banking system. All your payment related stuff was there. So if you cut it down and strip it down and say all I want to focus on is my accounts, then your risk is diminishing completely. So you need to think about again take the product lens and see that what risk does this product introduce to my business. Because if it's a DDA product, there is a very different set of risks versus, let's say, a payment product or a lending product, and then you decide what is your mitigation action. So that's the philosophy I would apply, that think about take a product mindset to whatever you're trying to build and then see what risk is introduced, because it's going to be very different. And then because I was having a conversation with our regulatory, organization within internally, and the whole conversation from what our current platform does, which is a bank in a box, to what I'm doing, the risk is completely different. So it really depends on how you are going to sort of define what product it offers, and then think about risk and mitigation.
Can I go on that? A bank makes money out of taking risk. And getting that across to people who've been in banking for a long time seems a lot harder than it should be. And I've had some of those old bankers working for me, and it's a difficult thing for them. But ours is very simple. In the UK, we have free banking. Really, the only way you make money is by selling asset products after you've sold some free banking. And therefore, you have to take risk. And as an organisation, I mean, look at ours. Ours was the simplest bank in the world. It's savings on one side and lending on the other side. And there's some work and risk in this side, there's some processing in between. Make that good, then you make money. It's not that hard, isn't banking? But getting that across to people who try to eliminate risk is quite a hard thing to do. And everything's about tuning to the risk, being able to forecast what you're doing. If you can forecast it, the regulator's cool with you. It's when you can't forecast it and predict what's going to happen. But tuning your system to allow risk. Fraud's a great example. We launched a credit card and we were too tight on fraud, way too tight. We just said, we've got everything from facial recognition to biometrics on passport. You just tap against your phone, you can onboard in, I looked at it in 2 minutes and 10 seconds and was spending in John Lewis. That fast into a virtual card, we were really tight on fraud. But we realised that we had to detune some of those stuff to let some more people through. Because actually, the risk against fraud, we had no fraud, but we were losing lots of customers. So what we're doing now is, and I call it eyeball tuning to start with. We've now got the machine starting to tune it because you're just playing off it. And it's getting more sophisticated as you're doing it. You're playing it against local areas and postcodes and different scrutiny for different things as it's learning as the machine. We've moved it out of the eyeball into a mechanism which is just tuning itself to take the risk. And that's quite a scary future if you extrapolate that out. And we've got little pockets of it going on, and I'm scared sometimes of going, wow, we tuned the system to start, we've got it completely wrong, we closed everything down, we were too cautious, and we started to open it up, but the machine started to tune itself in places.
Thank you, James. Excellent.
So if I may, I have one quick
Yes,
question. If
thank
you
you,
have the
yes.
time. That would be good.
Good. Yeah.
So I have one question. So we did speak about ecosystems a little bit. I know Arun touched upon it. My question is, who should be owning the ecosystem? So I mean, should it be the core banking solution providers who should be the ones in the driver's seat, or should that ownership be distributed? What do you see as the future?
Or yeah, see, at least I can only speak from our experience, right? We have seen a mix of both, right? And where we say we have this particular fintech as our, in our marketplace, and it's pre-integrated and it is tested, right? It is available, and we are very clear in terms of our back-to-back contracts, everything. That's where we are pretty much owning that relationship because we provide the financial value chain there in terms of the service, right? But there are also situations where the client actually nominates that this is the vendor that we would like to work with, etc. In such a case, we follow a slightly different model. So we've seen both the models in place, right? But very small organizations completely go with what we have in our marketplace. It's when you go with a, probably a tier 2 or a tier 1 bank, where they actually also nominate some fintechs that they want to be part of our value chain. Right? So we've seen both.
Thank you. Thank you. Well, if there are no more questions, then I would really take this opportunity to thank the panelists. Hopefully, we had some answers and a lot of questions that came out of this discussion, which actually gives a lot of fodder for the rest of the day and a lot of discussions around it. So, thank you again.